It's never going to be like the right time to enter a market, because the thing about real estate is it's competitive for a reason, because it's successful.
Welcome. This is the Hot Real Estate Investing Podcast, a podcast dedicated to helping others through real estate investing. Our hosts interview guests from all aspects of real estate investing who generously share valuable experiences and advice. Whether you're starting out or an experienced investor, this is the show for you.
Hello, and how's it going? My name is Travis Shelton, and welcome to the Hot Real Estate Investing Podcast, where I interview guests who want to help others investing in real estate. Today is going to be part 2 of my 2-part interview with Zach Haptonstall, the co-founder and CEO of Rise 48 Equity and Communities. Hope you enjoy.
You know, you mentioned something like you thought you missed the boat in 2019, 2018, right? So has that boat sailed? Is it a Red Sea now? Would you advise someone to get into multifamily real estate investing right now, or maybe wait?
Yeah.
I mean, what's your thoughts there?
No, good question, Travis. So it's never going to be like the right time to enter a market, because the thing about real estate is it's competitive for a reason, because it's successful. There's a statistic like 90% of the millionaires in America were made through real estate. There's a reason for it. And this is actually relates back to your last question too, Travis, and then I'll move forward. One of the reasons I originally got into mobile home parks is because I had heard everybody saying, oh, those things are a cash cow. The passive cash flow is insane. When I was looking at them in 2018, the cap rates were already down to like 4 to 5 cap rates. The cash flow wasn't that great. I was looking at mobile home parks and multifamily, and I was like, wait, the cash flow is almost the same. The cap rates are actually very similar, but with the apartments, I can increase the value more to get a better overall return. That's what I started to learn. And so, like, no joke, in 2018, I was so discouraged, thinking that this is overheated. We're at the top of the market. It's already so competitive. I can't find a deal that pencils. And that's natural when you're trying to break into any new industry. Well, little did we know, we'll buy some deals, in 2019, 2020, 2021, the market continues to take off, right? And we sell deals. It was even harder to get into the market in 2021, 2022 than it was in 2018, 2019. It's more competitive. And so right now, I talk to a lot of people, a few people a month, it seems like, that, are trying to get into the industry. And they're asking me, just in the past few weeks, hey, what do you think? Now is a great time to enter multifamily, okay? Because there's almost no competition out there. All the institutional equities on the sidelines, people are scared, and a lot of syndicators cannot raise money. And like the last few years, if you want to buy a 100+ unit deal in Phoenix or Dallas, you have to go non-refundable with your earnest money day one, okay? There's high stakes at play. It's scary. Right now, you don't have to do that, okay? You can get like 30 to 60 day refundable due diligence period, because that's the market. You can never get a hold of a broker as a new buyer the last few years, right? They don't care. Yeah, firsthand, Travis. I was the first. I had to keep harassing these guys, and they got sick of me. And finally, you get a deal, and then you get another deal, and they start to gain their respect. Well, now these brokers are bored. They have nothing to do because there's no buyers out there. So I've been telling people, like, just go out there, just act confident, start touring deals with brokers, and just start submitting offers, because they're not even getting offers. Even if your offer is 20, 40, 50% off the price, these brokers aren't stupid. They realize that the pricing is way down right now because of interest rates. Now is an excellent time. If you can structure your debt to mitigate against interest rate risk, then you can do a good job. I mean, you can find good deals right now. We're actively buying because we're getting 20 to 30% discounts. I told somebody last week, he's trying to get into it, I said, you should just go start making offers, tie up a deal, give yourself a 30-day refundable due diligence period, scramble to try to raise the money. If the first few weeks it doesn't seem like it's going well, just bail on the deal and just blame it on the debt. Just tell the broker, oh, my debt blew up, because it's happening everywhere, right? It's like you have an out right now. So I think now is a good time to try to enter if you're new, because you don't have a ton of competition. You can get favorable terms. It's now a buyer's market, not a seller's market, right? So it's like, a lot of people the last few years, Travis, tell me, we're at the top of the market, it's overheated, I'm not going to get in now, I'm waiting for a recession. Well, your 20 to 30% discount is here. There's no competition. So now the market is a lot softer, and now people are saying, oh, the debt is too, volatile, I'm not going to get in. It's like, well, when are you going to get in? I mean,
there's always a reason, right? And you're so true. Yeah. Like, all of a sudden, brokers were calling me back, right? And all of a sudden,
you've
like
seen
you
it
said,
firsthand.
Yeah, I've seen it firsthand. And then now you have, like you said, now they're good deals. Now it's not over asking price. Now it's not hard money day one. And so I totally agree with you. I think now is a great time to get in the market. You can never be perfect and time the bottom of a market or anything like that, but you can
Right.
buy bad deals in any market, and you can buy good deals in any market. So
Yep.
totally agree. And I love the fact that you guys have continued to expand and kind of look for different opportunities, and now moving to the Dallas market. So maybe what was that big impetus? Did you feel like you've done a lot in Phoenix, that just better deals were available in Dallas, that you like that market, or was this kind of always the plan to kind of really do amazing things in Phoenix and then start to expand into other markets?
Yeah, great question, Travis. We get that asked a lot lately. So we still love Phoenix, right? And we're still buying deals in Phoenix. At the time of this recording, what are we, like, the May just started, and we've already bought 2 deals in Phoenix this year in 2023. So we still like Phoenix. We keep buying deals, but it was always the plan to expand to other markets, right? The last 2 years, we've had many investors reaching out and saying, hey, when are you going to go to another market? I like the reporting. We like investing with you. Some of these people have 10 or 15 deals they're invested in with us, but they're like, I don't want to be all my money in one market, right? And so we've been telling people for 2 years, like, we will go to another market, but we first want to truly feel confident that we've built out all of our back end systems and processes, our management company, our supply chain, because when we do go to another market, we want to have the exact same platform. And when we scale, we want to responsibly scale so that we can execute on the results. We don't want to just start buying deals in different markets and we can't execute on it. And so we originally, Travis, we were going to go to Vegas. That was the plan. In early 2022, we were saying in 2023, let's go to Vegas, because it was kind of similar to Phoenix. But then the interest rates start going up. We see a recession coming. We're like, you know what? We don't want to touch Vegas, because I've got some friends there who are operators, not diversified employment, a ton of delinquency. They didn't do well during COVID. Phoenix and Dallas both did well during COVID. And so we said, you know what? We want to be Western U.S. And we said Texas makes the most sense. There's nowhere besides Texas, Western U.S. we want to be. We looked at all the markets in Texas. We really don't like Houston. We don't like San Antonio. We considered Austin, but very blue local legislation, not landlord friendly, not a lot of supply. Dallas made the most sense, similar to Phoenix, with strong job growth, population growth. And there's a lot of 80s value add deals that haven't been turned over there. So it's this exact same platform. Also, our supplier has a warehouse in Dallas. So we have the exact same supply chain, same materials, same logistics. So yeah, we felt like we could replicate the same model and kind of have like an easy transition. And as far as timing, Travis, like, we were going to plan to do it like in 2023 sometime. We didn't have like a hard date. But I remember, like, in November 2022, it just kind of hit me one day when I was thinking about how competitive Dallas is, how many buyers there are, and how, just like what we just talked about, I was telling myself, all the institutional equity groups are on the sidelines. The syndicators can't raise money. I told Bikram, I said, we have like a 6 to 12 month window. We could go pound Dallas, get our foundational portfolio built out, and instantly have track record where there's nobody else buying. Now we have this window to enter the market. So that's what we're trying to do, is we're trying to get to 2,000 units as fast as we can in Dallas, because there's not a lot of competition.
No, that's, genius. And be greedy when others are fearful, and be fearful when others are greedy, right? And so it's like everyone's fearful and want to be on the sideline. Warren Buffett, wants to, be on the sideline. But right now it's like, this is the time to be greedy and get out there. And I love that mentality that you guys have had. So to transition just a little bit, you guys have done just such an amazing job, with Rise 48 and building this amazing company, vertically integrated company with over 200 employees. But one of the things I really like to highlight, and this podcast is the Hot Real Estate Investing Podcast, but it stands for helping others through real estate investing. And so Rise 48, and one of the things I love the most about your guys' company is the way you guys give back. And so can you share with our audience some of the ways that Rise 48 gives back to the communities that they that they invest in?
Yeah, no, 100%. That's a big thing for us. So my wife and I, Grace, we're both Christian, and our faith is a big part of, what we like to do. So we told ourselves, like, once we get established, we want to be able to give back. And so, we're like a big, donor to Phoenix Children's Hospital, so we've been donating a lot to them and to their events and their causes. Grace really is passionate about, the charity side. So we have like an organization, Rise Up, Give Back, which is kind of like our charitable arm of the company. And so, we've supported like a human trafficking cause, which is a really big, passion of ours too. And then also, like, when you're talking about, just your own company internally and culture and staff, things like that. We want our employees to feel happy. We want them to feel like they're taken care of, but we also want to attract, the most elite talent in the industry. And we know that the best people know that they're best and they want to be compensated the best, right? So we try to be very competitive with compensation. We cover 100% of all of our employees' medical, dental, vision, and 50% of all their dependents. And so it allows us to recruit and retain the best people. And then we have 20% annual salary bonuses for every employee. We do different performance bonuses based on your position, things like that. So we want people to be incentivized. We want them to know that if you come here, we don't really care about your resume, as long as if you're getting results and you're an elite performer, we're going to pay you like an elite performer. And we want people to know that because they feel like, hey, there's opportunity here and I can really, climb quickly. And that helps us as a company achieve our goals. And then we like to do quarterly, all staff meetings and team events. Like next week, we're going to do our all staff meeting. Then we're going to take everybody to Octane Raceway. Like we rented out the entire place. And that's really fun. People have like the team building. We did a big Christmas party, last year. So all these things are important because, it shows employees you care about them, it builds the culture.
Retaining that talent is so important. Like most people, like they get the talent and then they forget about them. And it just sounds like you guys are doing an amazing job to really cultivate an amazing culture at your company, but also, giving back to not only the communities you invest in, but your employees, which is really amazing.
Important for sure.
So maybe last question I have is, what's your opinion, or do you recommend coaches or gurus for people that want to get into multifamily investing, or do you think people can do it without maybe some of the, the $10,000 guru course?
Yeah, and it's a good question, Travis. So, it's tough to say. There's no hard answer. I am supportive of education programs. I think that it's good to learn content. One of the things I first did was I signed up for at the time, I don't even know if he has this, but Michael Blanc had a very cheap education program. It's like $1,000, $2,000, but it was just a series of videos. Now he has one that's like 30 to 50K. I didn't ever join that, but that gave me foundational knowledge of it broke it down. You have to talk to brokers, you have to get a debt broker, you have to have an insurance broker, you have to have a property management company. And that kind of put together the foundational, concept for me, which really helped. And then I started trying to go to meetups and things like that. And I was like, man, the meetups here in Phoenix are crap. I'm not finding anybody that actually does what I do. And so, I joined a mentorship program, which is how I met you, based out of Dallas. And I dropped 30K. And to be honest, I didn't really get much value as far as the content or the education from that program. And I didn't like the culture of the program. It was kind of weird, but I met my business partners. I met a lot of good people. I met you. I met other investors. And so I'm a big proponent of joining networks, going to conferences that are solely focused on what you're trying to do, because it can collapse a time frame. I spent 6 months trying to find partners, and then I joined this group, which again I paid 30K, but I don't regret it at all. And the whole concept of that group is you join it to meet passive investors to raise money. We didn't really get value raising any passive money because it was so Texas centric, right? But met my two partners there. I met other people that I would later have to bring in on early deals to be a key principal and sign on the loan. I met somebody who could help raise money. So the advice
it was valuable to you at the end of the day.
It was valuable. Yeah, I think you need to vet the groups though, because there's more and more of these groups popping up, and you could easily blow tens of thousands of dollars and kind of feel like you got screwed on. So you need to be careful.
I think that's the problem right now. There's so many that people are just throwing money away and throwing money out the door. So I think you gave the audience a lot of hey, be mindful when you're spending this money, know what you're getting into, and then also know what you're trying to find, whether you're trying to find private money or you're trying to find partners, there might be a different group that's more valuable to them.
That's a good point. Yeah. What is the quality of the people of the group? And is it the type of people that you're looking for? Like you said, is it aligned with your goal?
Yeah, no, that's great.
Hi, my name is Chris Hallam of Simplicity Lending Group and powered by Nexa Mortgage. I'm a trusted and experienced loan officer who will work with you to find the best mortgage options for your needs. From first-time homebuyers to experienced investors, I have a wide variety of loan options and competitive rates, which makes me the perfect choice for those who are in need of creative financing. Contact me today and take the first step towards financial stability.
All right. Well, are you ready for the hot seat, Zach?
Ready? Yes. It's feeling
All
warm.
right. We ask all our guests the same final four hot questions. And so, number one, what is one book you'd recommend to someone wanting to know more about real estate investing?
Yeah, good question. So there's like several books people have probably heard of. I think I initially read the ABCs of Real Estate Investing by Ken McElroy, and then his ABCs of Property Management, which gives you good foundational knowledge, and that kind of helped me to realize what I needed to do. It's not going to go dive deep, but it gives you the initial. I'll throw a book out there which is not real estate centric, but I just recently started reading it, and I hadn't read it since 2018 when I was kind of going through the low points. And the book is called Mastery by Robert Greene. And it's not real estate centric, but what it talks about is he takes some of the most successful people through history and he studied them, like Leonardo da Vinci, Benjamin Franklin, Albert Einstein. And he talks about how none of them were wealthy, talented, had anything extra than anybody else, but they just stuck to what they were trying to do for so long and they grinded it out. And it's the whole concept of 10,000 hours. And there's something psychological or magical about when you develop 10,000 hours of pursuing something that you can become what's called a master. And I remember reading that in 2018 because I was getting so discouraged. I was spending all this time and having no actual visible evidence of progress. But it gave me confidence to keep going because it talks about how you can be making progress subconsciously that you don't realize. And later on, you're going to hit this inflection point where when you look back, it was all worth it. And now it's kind of cool. I just started listening to it again on audio a couple weeks ago, and it made me reflect, right? It was like, wow, a lot of this stuff resonates with me. And I think for anybody who's pursuing this real estate or any company, you're going to go through these, he calls it tedium, which is like these long, boring, tedious moments that suck that you don't want to have to go through, but you have to put in that work and that discipline, and you'll see the results later. So anyways.
I love that. And I've seen that book on Audible. It's been recommended, and I have not listened to it. So I'm definitely going to pick it up and listen to it.
Yeah, you should.
Zach, what's your favorite like productivity tip, trick, or tool? Maybe a time saver or app that you utilize in your day to day. You do so much. Like, how do you get so much accomplished? You know?
Yeah. No. Honestly, I'm not big with like apps or tech. So for me, I think my whole strategy is I simplify stuff. Like, I have 2 pages of apps on my phone. Like, you can only scroll once. Like, if it's anything that I don't use every day, I delete it because I don't like to have so many notifications. You know, I don't really watch TV. Like, Grace and I will watch like a movie on Friday night. I just try to like stay really focused on what I have to do, you know, super disciplined and not have all these distractions. And then I don't really go to like dinners, lunches, parties, or I'm like a very boring person, Travis. I don't do that stuff because I just need to stick to what I have to do. And I'm always scared. If I go do something that's like quote unquote fun, I almost feel guilty. Like I'm like falling behind on what I have to do. So I try to keep it very simple, very focused on what I have to do to, you know, keep moving forward.
So Zach, what is your biggest real estate mistake or failure? And what did you learn from that experience?
Yeah, no, good question. And I think we've been fortunate where we haven't had anything get to the point where it's been like a major failure. Like we've never, you know, lost money. All the deals have exceeded returns, never done a capital call. But I think what we've been, you know, fortunate to realize is that whenever we see a potential mistake or failure coming up, we try to be very proactive and quickly, you know, invest money to change our strategy or hire that position or pivot, you know, to be proactive and try to eliminate that vulnerability. So like, for example, our very first deal was 36 units. We thought we could just plug in a third-party property management company. They would do all the construction management, renovate the units. It'd be easy. It's not that simple. Like you have to manage the manager, and the property management company was basically managing all these third-party vendors and subcontractors, and none of them were staying on schedule or on budget. So like I was out at the property chewing out vendors, you know, and had to make sure we're getting all that stuff done. So we eventually took construction management in-house first. We started hiring our own staff to source, bid out, and manage vendors daily on site. Okay, then we were relying on the vendors to buy their own materials. They kept getting impacted by supply chain issues. So we figured out how can we resolve this, and we brought supply chain in-house. And then eventually we got to the point where, you know, our portfolio was getting bigger, property management was becoming an issue. We had too much turnover. Our property management company was not paying the staff enough to keep the good people. So we brought that in-house. And so we're always trying to look at like, okay, where's our vulnerabilities? Where do we have exposure? And how can we get ahead of this now so we don't have this, big failure later?
And I love that because it's like it proves that you're gonna keep as you progress, you're gonna hit different different challenges, and you got to be able to constantly be coming up with new solutions to different problems and always moving forward. But it's not like you ever get to some point where you just all of a sudden are out of problems or out of
it's even more
trouble.
complex now, it seems like. Yeah, we have to always adapt. Like every month we're changing the investor reports a little bit because we get different investors that reach out and say, hey, I wish you'd put this in there, so we tweak it. Or, like 2 months ago, an investor sends me a webinar of some other big sponsors saying they're doing capital calls on different assets. It was a Friday night, like at 10 o'clock. And I'm like freaking out. I'm like, crap, we need to do a webinar telling people we're not doing capital calls because I don't want people to think we're getting. So we did this live webinar and we blasted it to like 5,000 people. So it's always like you have to adapt and pivot. There's never really a dull moment. I'll say that.
Yeah. And Rise 48 has never had a capital call, right?
That's right.
That's
Okay.
awesome.
Yeah. Tell your friends.
So finally, Zach, you've shared so much about yourself and Grace and all the great things that you guys do. But if there could be one thing you could be remembered for, what would that be?
Yeah, honestly, I just want people to, remember me as kind of making an impact and helping them achieve their goals. Like even with our staff, like I've told some of our staff, like, hey, you're not going to want to work for us forever. Like if you want to go do your own thing, like I'll have your back and support you because I can relate to that, being a W-2 employee. So I would hope that like our employees, our investors, partners that we worked with, just thought that we tried to do right by them and that, we want to be competitive. We want to win, but we want to have abundance mindset, and try to help other people out. And there's no reason, we can't all win, if you're working hard. So I think that's how we want to be remembered, is that we were like, hard-nosed competitors, but we also tried to, help other people out and do right by people and not, screw people over, so to speak. Because it can be a cutthroat business, especially the bigger you get. So we like to try to, maintain that reputation.
No, that's awesome. Really appreciate it. And the best place for our Hot REI community to connect with Zach is at rise48equity.com. You can schedule an investor relations call if you want to there with Zach or a member of his team. Zach, man, I just want to thank you again so much for joining me today. This was a lot of fun, and I really appreciate your time.
Yeah, thanks so much, Travis. Really appreciate it, man. Great catching up with you, and look forward to talking to you. Thanks, everybody, for listening.
Yeah, definitely. Thank you for tuning in today, and commit to taking action today, this week, to move your investing forward. Take care, and God bless.
Thank you for listening to the Hot Real Estate Investing Podcast. Check out our website, hotrei.com, for additional content and resources. And please take a moment to subscribe and leave a review so we can continue to bring even more value to others through real estate investing.